And to the markets, the equities market closed higher on Tuesday owing to demand for the unusual suspects, consumer goods and banking names. The all-share index advanced by 0.35% to close at 27,609.67 points. Market breadth was positive with 23 gainers as against 16 losers. Total volume traded declined by 15.17% to 569.17 million shares, valued at 6.68 billion naira and exchanged in 4,632 deals. And the unlisted securities market, the index went up by 0.03% to close at 586.41 points. The market capitalization closed at 396.84 billion naira, and in just 12 deals, a total of 1.08 billion securities were traded, valued at 7.14 million naira. Let's look at the currency market now. The central bank sold about $337.30 million at the interbank segment, consisting of spot and forward contracts, SME intervention, and FX for invisibles. On Tuesday, the naira declined against the pound sterling and the euro to close at 409 naira 72 kobo and 348 naira 95 kobo each. However, the naira strengthened against the dollar at 305 naira 45 kobo. Other parallel markets, the naira strengthened against the dollar at 300 naira, while against the pounds and the euro, it remained flat at 495 naira and 420 naira each. Meanwhile, the naira weakened against the dollar at the investors and exporters window at 383 naira 17 kobo. And for more analysis on the markets for Tuesday, I'm being joined by a senior investment analyst at Afri Invest, Robert Omotunde. Good morning, Robert. Thank you very much for having you on the program. So how would you describe what happened at the market yesterday? If you will recall, on Monday, we saw the all-share index nosedive so deeply, and then yesterday there seemed to be a reversal.
Well, what happened could just basically be attributed to investors taking profit. Remember that market was on a 10-day gaining streak, and we saw the market reported about 12.6%. in 10 days, which was altered on Thursday. And of course, on Friday, we saw that market took a hit, I think about significantly about 2.3% thereabout. The market lost on Friday, before we saw another major loss, on Monday. So Tuesday was a respite, that the market experienced, which we believe that it's expected, given that before we started seeing that reversal in trend, the market relative strength index had gone past 85. That's the index we see to know when the market is overbought. So what we saw yesterday, was a respite in the 2 day of consecutive losses that the market also experienced.
Now, when I spoke to an analyst after yesterday's trading, he said it was all about confidence, from investors outside in the markets. Do you share that same view?
Well, yes, investor sentiment is majorly driven by confidence, so no investor likes to put his money where there's no certainty, and which speaks to why we've experienced that so much drag, in market activity. By the way, before market did that 10 days of consecutive gains, the level of index at 28,000, we've not recorded that index in the last 8 months. Perhaps the last time we saw that kind of bullish trend was when a policy was introduced, first in May 2016 and subsequently in June. Those were the periods we had liberalization of the downstream oil and gas and the announcement of a flexible foreign exchange market. So what we saw now, we have spoken to a couple of traders, those who are close to the market, even Afri Invest brokerage team, and they have told us that, some of the foreign investors who have left this market, in 2014, you know, are beginning to come back. And the major reason they are citing is the fact that we've seen some market-friendly foreign exchange markets. You know, there's a window, which you call the investors and exporters window, which investors find comfortable, you know, because before now we've seen some artificial stability in rates, you know. So, but the I&E window is deemed to be market friendly, and investors can relate with that, you know. However, like you mentioned, confidence is still an issue. You know, we are at a phase where investors are still very cautious. Even now, they are not in fully. They are still trying to test the market. Now,
talking about the foreign exchange market, we've seen the continuous intervention by the central bank, you know, in that market. And yesterday we saw the inflation rate released by the Nigerian Bureau of Statistics. So, how are you confident that this CBN's intervention is it really reflecting on the general economy, looking at the numbers NBS came out with yesterday?
Well, yeah, there are two different things. Yeah. So the recent intervention by the central bank started sometime around February, right? And before you see the transmission between, because we all agreed that the hike, the inflationary pressures that we've seen in the system is largely linked to our FX policy, you know, because if you check even the inflation number that's been released now, you know, we talk about food inflation, which seems to be rising. By the way, this rise started since November 2014, when the currency was first devalued. And, you know, between then and now, we are still trying to find, you know, a comfortable foreign exchange policy. You know, as we speak, we don't have one yet. So what we're still having is, you know, a lot of management. So, but to the point is that, yes, the lag between the interventions and how it begins to transmit within the economy, you know, will not be within 1 month or 2 months. And the inflation figure we are seeing now is for April, you know, and a lot of base effects are playing in, you know. Of course, even though we notice that there's still pressure on a month-on-month basis, you know, but going forward, we believe that what the central bank is doing now is apt. They should continue, but we should unify the rates.
All right, thank you very much, Robert, for your time. Robert Watson, the Senior Investment Analyst with Afri Invest. We'll take a quick break. When we return, we'll look at the Nigerian energy markets.